Good morning. Happy Friday. Welcome to Stock Market Today. It's Friday, January 8th, 2021. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email. Follow along with this show. Get daily stock ideas to consider. Hits your inbox every trading day before the market opens. So U.S. equities were higher in Thursday's trading as the major indices closed at record levels. Tech, discretionary, and energy outperformed, while utilities and staples were the only sectors to finish in the red. Treasuries were mostly weaker, with the curve continuing to steepen following that big backup in bond yields on Wednesday. Dollar saw good gains against both the yen and euro. Gold finished up 30 basis points. WTI crude was up by 40 basis points. As we get to the desk this morning, S&P futures are up 30 basis points in early trade after Asian markets were mostly higher overnight. Japan, South Korea, and Hong Kong leading. China did end the day lower. European markets are higher. Treasuries are mixed with the curve continuing to steepen. Dollar is stronger against the euro, little changed against the yen. Gold is off 1%. WTI crude is higher by 1.4% to kick it off on a Friday morning. The day after we had record closes across the board on a closing basis. S&P 500, the NASDAQ, and small caps all at record levels. Add the Dow to that mix as well. And the roadmap continues to play out. It's pretty straightforward. The trend is to the upside, probably getting to the point where we have to start thinking about adding or raising support levels at some point. But here in the near term for today, again, big picture levels, support at 360 for SPY, then 340. For the Qs, 260 is key, 300 is important in the near term. IWM, probably have to bump that up to about 180, 190 on the support level. Above 340 on the SPY, we see upside potential to 413 as our bullish thesis continues to play out. Broadening across the board. And I wish there was something different to say, but there's not. So I'm not going to make it up. There's nothing different to say as it relates to the trend in equity markets here in the U.S. and globally, by the way. Take a look at the ACWI ex-US, the ACWI. ACWX is the ticker symbol on the ETF. Zoom out and notice that it is breaking above its 2018 highs. Look at the value line geometric index here in the U.S. Zoom out and notice it's breaking above its 2018 highs. So the participation is broadening. Breadth remains strong. Markets continue to grind to the upside. Let's hit our market in a minute now. What are we writing about today? Well, new closing highs from the major indices. We talked about that. And that's playing out as long-term treasuries break near-term support. Right? So that sends a message, right? A risk-on type message for the market. Take a look at TLT, break down. Should it remain below 155? I think you're playing for the March lows. Semiconductors extend their leadership. We all know why that's important. For those of you who are longtime listeners and followers of my work, a great deal of importance placed on semiconductors. They are continuing to lead, and the intensity of their outperformance is increasing. What's interesting is that this is all playing out as the fan mags break down on a relative basis. In my note today, I have my fan mag index, and it's consolidating on an absolute basis. But if we look on a relative basis, what we'll notice is that it's breaking down relative to the S&P 500. As we said, futures point to a higher open here today. Let's take a look at the major indices now from a power bar perspective. Dow adds 74 basis points, 6-2 bulls to bears there. S&P 500, 130 to 51 bulls to bears after tacking on 1.5%. NASDAQ outperformer on the day, 18 to 10, adds 2.4%. Small caps, slight outperformer relative to the S&P, 846 to 111 bulls to bears. Bonds down tick, sending yields higher. Tech was your outperformer yesterday, 18 to 2. Bulls to bears within the XLK after that group added 2.7% on the day. According to the Chaikin Power Bar, small cap stocks and large cap stocks are strongly bullish. Is it our stock of the day now? One of my interesting name here, Emerson Electric, part of the electrical equipment group that is strong. The trend is strong, ticker EMR with a bullish rating. Closed at 82.07 yesterday. What's interesting to me here is we have a bullish stock outperforming, seeing an uptick in the intensity of outperformance. Overbought, oversold indicator rounding higher in an oversold position, while Chaikin money flow is bullish. That's an interesting setup here as the stock consolidates near all-time highs or near 52-week highs here. And I like that setup. It looks compelling to me. A lot of opportunities out there, a lot of charts that look like this, quite frankly, and you're just kind of seeing good opportunities across different market caps, across growth, value, across sectors and industry groups. So a lot of opportunity out there, at least the way I see it. EMR, Emerson Electric looks compelling here in the near term. Let's hit our sector tracker now. The movement of the major sectors over the last 5 days. At least in the near term, kind of confirms a lot of what we've been talking about for the past 6 to 8 months, which is this rotation into more cyclical areas of the market. Energy, materials, and financials are cyclical sectors. They're at the top of the list. Healthcare performing well of late. Discretionary industrials are also higher. Tech had a great day yesterday, but it's still down over the past 5 days of trading. Comms, same story. Staples, Utes, and REITs at the bottom of the list. So if we think about what this looks like, cyclical, risk-on type areas of the market leading, while your defensive groups, the staples, the utilities, and the REITs underperform. If you are bullish equities, that is a framework that supports a bullish view, in my opinion, and it's the type of framework and the type of leadership structure that you want to see across time frames. It's our industry in focus now. Innovative tech services. Past 6 months, been an outperformer. XITK, the ticker symbol on the ETF, leading the S&P 500 by nearly 21%. Power bar ratio, which looks at future potential, is strong. 15 bulls, 9 bears, ranked number 18 of 21 subsectors. Actually moved down 1 slot over the past week. Some names in there that might be interesting, that might be compelling. Momo, M-O-M-O, very bullish. J2 Global, JCOM, very bullish. And Cohu, C-O-H-U, which is a name that we've been highlighting recently, has a bullish rating here at Chaikin Analytics. And let's take a look at the chart of XITK. Very much an uptrend. Bullish, 15-9, bulls to bears. Tacked on 3.12% yesterday. Strong trend above a rising long-term trend line that's done a pretty good job of acting as support to near-term pullbacks. Now, the fund is oversold, outperforming, though the intensity of outperformance has been lagging of late as this rotation's played out, but still an outperformer. Bullish fund, outperforming, oversold with bullish money flow. I mean, if this was a stock, I would tell you I liked the setup. Within this fund, there are 15 bullish or very bullish names that could present some compelling opportunities here in the near term. Makes sense to drill down on those. Do your homework, put a list together, and find the names that potentially fit your style from a technical perspective, knowing that they have a bullish rating here within our 20-factor model. So it's broad. Everyone's talking about the rotation, and the rotation is a relative one. But groups like this are still in solid uptrends. I mean, it's hard to poke a hole at this other than to say, relative strength is waning a little bit here in the near term. Let's take a look at what's trending now. Yesterday's S&P 500 movers and shakers are gainers and losers. DXC up 9.3% after receiving a non-binding bid from Atos, A-T-O-S. INCY, I-N-C-Y, one of their drugs was given an orphan drug designation. That sent that stock higher by 6.8%. EOG assumed with a buy rating at TD. That stock higher by 6.4%, part of the energy group that's been solid of late. TER hits a 52-week high after trading up 6% yesterday, part of the semis. And L Brands, their holiday comps, investors like what they heard from the holiday comps. That stock up 6% on the day. Loser side of the board, ConAgra down 5.5% following their earnings announcement. CMP, didn't see anything company specific there. Stock down 4.8%. OMC down 4.5%. No real news that I could tell. Same story, ATO down 4%, as well as NI down 3.8%. Didn't see any company-specific drivers there. Now, we are going to start to get into earnings season soon, which is also interesting as we get to the end of the year, go into the new year. Stocks in a solid uptrend. Been in a little bit of a news vacuum as far as company-specific news is concerned, but that should begin to change in the next couple of weeks as companies begin to report their fourth quarter earnings. Be interesting to hear what they have to say as it relates to their outlook for 2021. Let's get into the charts now. Fridays, we do our key themes and relationships and try to figure out what that means. For those who have been paying attention to the cyclical rotation, I think this has been a big driver. The copper to gold ratio, which we highlight often. I am not an economist. However, this chart allows me to play one on TV as I kind of use this as a proxy for investor expectations for global growth economically. If we take a look at it, we can see that it began to roll over and decline from 2018 through the bottom here in 2020. During that time, for the most part, we saw outperformance by growth stocks. When economic growth is slowing, we want to pay up for what is actually growing. However, since bottoming out, moving higher, we have seen growth stocks lag relative to value stocks here in the bottom. And after a near-term consolidation, this ratio looks to be resuming to the upside. So would not be surprised if this continues to see cyclical stocks continue to perform well. Above the 200-day moving average, which is beginning to round higher. So again, a lot of moving parts, but this is one of the key drivers that helped us identify some of the rotation across sectors when we started talking about materials and then industrials, financials, and now subsequently energy playing out. Doesn't play out with the flip of a switch, as I like to say. It plays out in a steady rotation over time, and you're seeing it play out now and continue to play out as the copper to gold ratio continues to grind higher. Now, for the bullish view on the market in general, semiconductors relative is a big driver of our views. Take a look at SMH relative to the SPY. So semis relative to the S&P, solid uptrend, right? Near-term pullback, now trading at new highs, above a rising 200-day moving average, all the while the trend being confirmed by momentum. Look at the RSI. This is the RSI of the ratio, and it has remained in bullish ranges for the better part of 2 years. That's kind of interesting as it relates to the S&P 500. But what's really compelling is when it accelerates to the upside. So yesterday we talked about one of the data points for the broader market being the BREF, in particular the advanced decline line, breaking to new highs as being supportive of the S&P doing the same. We didn't have to wait long, got a closing high yesterday, and odds favor that continuing, especially if semis continue to outperform the market the way they have here more recently. So compelling case to be made as semiconductors remain leadership. And then if we're thinking kind of, investors' appetite for risk and what that looks like, take a look at high yield bonds relative to treasuries in the intermediate term, HYG relative to IEF. When high yield is outperforming treasuries, which they did not do for much of 2018, 19, and into the low in 2020, it's a sign of risk on in the marketplace, in my opinion. And that's playing out as the 10-year yield grinds higher. We have a 10-year yield closed over 1%. Importantly, for the financials, the curve is steepening, right? That's a bullish tailwind for the financials, part of our cyclical trade. So if you're looking for whether or not the cyclical trade has legs, you can look at 10-year yields or just treasuries across the board. If you're trying to get a gauge for risk appetite in the marketplace, high yield relative to treasuries is a compelling place to look and to get a sense for how investors are thinking about the market as a whole. But as always, you want to drill down, find the relative strength, find what's leading, right? That's where you want to focus your attention, avoid what's lagging. That to me is how you're going to find your best opportunities. So we've made it through the first week of 2021. The news headlines continue to be volatile. However, a process and a roadmap that allows you to cut through that noise, I think, is really important. I hope everybody has a great weekend. Take us for a trial, chaikinanalytics.com/test drive. Be well, be safe. I will be back with you on Monday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.